Hello, everybody. A warm welcome back to the stage one of API Days Dubai and Middle East. This is our day one. Prior to this, on stage one, you saw an inside-out view of open banking from various stakeholders based out of this region. We had an interesting panel discussion discussing upon the expectations, opportunities, and challenges of open banking. Then a session on the open banking in Saudi Arabia review, and then the open banking and the halal payments. Moving on this stage one, we are bringing together a couple of great speakers, people who have been there, done that in terms of open banking and open finance. But only difference is it's in a different geography. They are joining us and sharing their best practices, the pitfalls to avoid, the success stories, and whatnot. I would like to invite Hugh Davis, co-founder and chief commercial officer at Ozone API. He will be moderating the panel on open banking, learnings, and best practices from UK and Europe.
Thank you. Welcome. Thank you. And yeah, thank you for the invitation to have this discussion today. It should be a really good discussion. So, as Prasant said, I'm Hugh Davis. I'm one of the founding team at Ozone API. We're a technology platform that help banks and financial institutions around the world implement their open banking APIs. And prior to Ozone API, I was part of the leadership at the UK's open banking implementation entity, where I led the development of the open banking ecosystem in the UK. And we've got a fantastic panel today. We're going to be spending a bit of time talking about the UK and Europe, some of the learning, how things are going, some of the things that went well, some of the things that could have been done better. Perhaps a look around the world at some of the other markets that are starting to build on those learnings and leapfrog, and try and crystallize that into some key learnings for the region to help the markets in the Middle East leapfrog and kind of set the new benchmark for open banking and open finance. I'm delighted we've got an amazing panel with us today, so it'd be great if we could bring them on stage, and I'll start to introduce them, and then we can dive straight into the discussion. This is quite a unique one because I know a lot of the panel very, very well, and we've done many of these things before, but in slightly different guises. So it should be fun. But delighted to be joined by Helen Child, who's the founder at Open Banking Excellence. And I think I'm right in saying there probably are not many better connected people in the open banking, open finance space in the world. I think she knows everybody, so has some great views. We've got Chris Michael, who is a very good friend and a co-founder of mine at Ozone API. He's the CEO at Ozone API and was the guy that led the development of the open banking standards in the UK. We have Dimitri, who's the Chief Operating Officer at FinTech Galaxy and the former CEO of SaltEdge. So again, Dimitri's been around the block on this for quite a number of years. And Kevin, who is a sort of a specialist commercial consultant in the open banking space and has been sleeves rolled up driving perhaps the biggest open banking payments use case we've seen anywhere to date. So we've got some real experts. We should be able to have a fantastic discussion. And I wanted to start with, I guess, thinking about the UK. We're about 5 years into the journey now. We've got millions of users. We've got a few years worth of experience. So I wanted to spend a few minutes just thinking about kind of how is it going in the UK? Where are we up to? Helen, if it's okay, I'd like to start with you and perhaps just get your thoughts on where the UK is in that open banking journey, because it is a journey. It isn't a sort of one and done thing. So where do you think the UK is? How do you think it's going?
Hi, Hugh. Thank you. It is a journey, and I would answer that by saying that a couple of key points. The UK created the blueprint in the Fingleton report all those years ago, they said that the UK created the blueprint for open banking. So we've created the template for other countries to learn from. So there's a lot of lessons learned, and I'm sure we'll be covering those. Where are we with open banking in the UK? Well, it's definitely working. We're at the early adoption part of that phase. Very recently, OBIE, which is our competitions remedy, announced that there were 6 million open banking users in the UK. Now, that is just 4 months after they'd announced that there was 5 million users. So that gives you an idea of the growth trajectory of open banking. So are we there yet? No, in the words of Carol Dweck, it's not there yet. You know, Carol Dweck, the whole growth mindset, it's a journey. You're absolutely right. It is a journey, but it's definitely working. And it won't be long before we see mainstream adoption. So open banking payments, which is where we started in the UK, will be ubiquitous, and it's not far away.
Yeah, it's a good point, actually. And it is all about the use cases and solving problems for customers. Chris, I wonder if we could get your view just in terms of what are some of the use cases that we've seen really gaining traction and driving some of the numbers.
Yeah, I mean the first use case that really use cases that started to go live were personal finance managers. I don't think they're working largely. Some of them are, but the reason I don't think they're working is because in many cases what you need is open finance. So they're starting to work, but with access to limited sets of data. And I think open finance will really hopefully make those use cases work much better. The next use case we saw was extending that concept of account aggregation into business accounting, and that is working. And that's what really drove the initial growth 3 or 4 years ago when open banking started to kick off in the UK. That's what drove the initial growth in volumes. Cloud accounting packages doing bank reconciliation via open banking APIs. It's now the kind of predominant way that any business can access their bank account data in their accounting package, and is really valuable for preparing accounts, making tax digital, submitting tax returns, etc. So we're starting to see, or have started to also see, quite a lot of both personal and business lending driven by open banking. So more real-time access to data to enable smarter, better credit scoring, more accurate credit scoring, smarter and more efficient and more speedy lending decision making, and that I think continues to grow. But as Helen said, the payments is really what's starting to take off. It's not there yet. We're seeing some payment use cases working really well, and a good point about use cases. You know, open banking has got enormous potential to be a genuine alternative to point of sale and online e-commerce payments, and it's not doing that really in any volume at the moment. But
actually, on that, it will be great if we can in a moment, if we switch over to Kevin and get Kevin's thoughts on the payment opportunity, and particularly the use case you've been involved in driving.
Absolutely. Yeah, I just finish on one point though. This isn't really anything to do with the kind of standards or the concept of open banking. It's to do with the implementation of it. And where you see open banking work well, it's because there are aligned incentives and it's been implemented well.
And let's hold that thought, because I think a large chunk of this discussion is going to be around what are the things that went really well, what are the things that could be done better, and learnings for other markets. I think there's a very rich scene there that we can explore. But as well as these cases, Kevin, it would be great to just get your thoughts as well in terms of where we're at on the journey, particularly around payments, because I know you've been intimately involved in driving some very, very significant open banking payment volumes in the UK.
Thank you, Hugh, and thank you for the invite. To start, I think it's always good to say nothing is perfect, and no one's really cracked this. In terms of grading, I would probably say the UK is 6 out of 10 in terms of getting it right. Perhaps they could have done better in a softer engagement approach. Perhaps they could have looked at API standards in a slightly different way. Perhaps they could have worked with the banks in a softer, more appropriate way. But the process was what the process was, and the decision made and the outcomes are what they are. But I think now there's a point where 5 years down the line, the banks have recognized the opportunity that open banking can deliver. At the moment, it's delivering for corporates, and obviously I've worked on the biggest and most successful use case in the world. But there is an opportunity to work with the consumers and to make it consumer-centric, which it isn't at the moment.
And before we get into all of the things that could be done better, could you just bring to life that use case that you worked on briefly?
Absolutely. So HMRC is that standout use case, and the concept was to see how open banking technology could integrate with HMRC systems and produce an error-free transaction. So every year HMRC intervenes and corrects more than 2 million plus payments where something went wrong. Typically the unique tax reference number is incorrect, and that leads to an unallocated payment. So what HMRC did was created the first ever public sector open banking tender, then implemented it within a 6-week timeframe from the point of award. Now that's typically unheard of in public sector, and in actual fact even in private sector. But we knew exactly what we wanted, and we knew exactly how we would integrate with the API technology, as we'd done our due diligence prior, and we'd done a proof of concept prior. So we commenced with 1 heads of duty, and around about 3 weeks in, we decided to add more. And today we've enrolled all of those heads of duties. We process more than 2.3 million transactions to date, which have a value of about £5.5 billion. Now, to put that into perspective, HMRC is the largest payment acceptance company in the UK, or institution, I shouldn't say company, institution, taking over £650 billion a year. So 5.5 billion is a very small segue into the payment vehicles and the types of payment type vehicles we use today. But it's a great stepping stone for what's going to come in the future.
Yeah, and it's certainly a catalyst use case to get that many people paying their tax through open banking payments, and they're huge numbers. We've talked about a few of the metrics here in terms of adoption, the number of users. We've talked about volumes of payments. Dimitri, it'd be great to get your view just in terms of, are we where you'd expect to be in terms of that adoption journey? What do you think?
I think no. We are in process. It's a journey as always. And in terms, if we compare with other jurisdictions in Europe and so on, yes, UK is far ahead, maybe 2-3 years at least. But if we compare what can be achieved, there is some things that can be improved as always. What I have liked is that regulation and approach and standards and great work of open banking implementation entity and collaboration is moving these things forward. However, as always, there is some concerns from banks in terms of risk, in terms of verification, AML. Fintechs are different in terms of their understanding, their maturity level, and so on and so on. And as always, it's very hard sometimes to identify this use case, to prove this use case, to grow this use case, to remove all the obstacles in each of use cases that is implemented on the market. As was mentioned, that it started from PFM. Yes, PFM is a good way for retailers one, but does not give enough value because it's limited in terms of accounts that you have access. For corporate, it's working much better because it resolves one of the main points of any company to make this reconciliation, ERP, accounting, tax, advising, whatever. And right now with payment, there is some not clear pieces in terms of liability, in terms of risk, in terms of disputes. And this lowers adoption rate. So I believe that there is need for some additional education, especially for retail customer, for corporates, how things should work, why it's reliable, what is the risk, and they can compare, use efficient method for their own benefit.
Okay, no, thank you. And I mean, that kind of leads us into a kind of a helpful segue. So what I want everyone to do, put your positive hats on now. What I want to think about is what are some of the things that went really well? So if we're looking at this from the perspective of learnings that other markets can take, what are the things that we got most right? Chris, I'll perhaps start with you, and please let's not everyone try and cover absolutely everything, but if you could pick out one or two things that we absolutely got right, and then we'll kind of work through the team to build on them.
Sure. I think I would highlight really two things that I'm very, I suppose, happy and proud about what we kind of achieved together in the UK. One is that we developed the standard with the ecosystem, with the market, with banks and fintechs equally. This wasn't a standard that was written by a collection of banks or overly influenced by the banks, and that's unusual. In fact, this is the only market in the world where that's happened. Every other market, every other standard is largely driven by banks and FIs influencing that, and I think that was important. And that led to the second really good point, was that we put a lot of stuff into the standard that went or enabled banks and fintechs to introduce services that went way above and beyond the kind of regulatory minimum of the CMA order and or PSD2. So there's a lot of stuff in there that's in what we call the premium API space in the standard. So I think having a standard that's market driven and isn't a limiting factor and is in fact an enabler of innovation, I think it's a really great starting point.
Yeah, and I know we talk a lot, right, about for other markets around the world, don't reinvent the wheel. There's a really solid base of standards that are now becoming more of a kind of blueprint to build on and replicate around the world, building on the OpenID Foundation's FAPI standard, the UK standard. There are a lot of markets that have taken that and built on it and continue to improve it. So no, I agree with that wholeheartedly. Helen, I mean, what are your thoughts? And perhaps if I might see one, how valuable do you think was a more coordinated implementation approach for the UK? Because it was very different in the UK than across mainland Europe. What are your thoughts on the things that really got right?
To complement what Chris has just said, because gold dust, what he just shared, would be what have we got right? In a nutshell, I think we've inspired the world. It is that simple, and we see that at Open Banking Excellence with our viewing figures. We get regulators, policymakers, chief execs, fintechs, big techs around the world tuning in to learn from the UK. So what have we done right? We have inspired the world and encouraged them to start their own journeys. So that is the big thing that we have got right. We really have. And being the first in the world, of course, there's going to be lessons learned. And of course, there's going to be countries that learn those lessons and can implement and adopt open banking faster. And I know we're going to talk on that. But I don't think we should lose sight that that's our big achievement. We have inspired the world. And that has had a real impact on countries' economies, on society, and on the environment as well. You know, if you look in the UK, what we've done around financial inclusion, we have made a huge impact on society, and that will continue. So those are the big sort of picture things that we've done. To go to your question about Europe, where the UK is obviously no longer in Europe, we had a very coordinated approach, a very compliance-led approach. And so we have a common set of standards, and maybe we can talk about interoperability later. But in Europe, they have a different approach, and they are at a different place of the adoption. They are not where we are on the curve. They have a lot of ground to catch up, and a lot of that, I believe, is because there isn't a common standard. So to Chris's point, what did we do right? You bet we got the standards right. You bet, of course, you know, we can improve them. It's the Carol Dweck growth mindset again. It's a constant we're not there yet. We're not there yet. We never will be. We'll want to constantly improve. So without wanting to, say anything uncomplimentary around our European friends, they could do with looking at, of what we did in the UK and having a little bit more uniformity.
Yeah, and I think, it was a little bit different, right? Because we had the competition regulator driving a very strong mandate to the 9 biggest banks, and they were mandated to follow a particular standard and to go through conformance testing. So it created a different foundation. And Dimitri, over the past number of years, you've been seeing this firsthand, both in terms of bank implementations and connecting to banks. As you look at the UK and Europe, and let's think particularly around the UK, what are the things that you think the UK got right?
From my point of view, taking from perspective of third-party providers, I have seen what is done, how done in UK, in Europe, and even here in GCC region. So first of all, I think it's regulation and the smoothest process that allows TTP to apply for a license, to implement all the necessary compliance obligation and so on. This is a critical, and in UK it's best process that I've ever seen across Europe, across GCC region, and so on. And this gives us a lot of fintechs that can provide a lot of feedback, use cases, and grow them usage of the services. This is critical piece that was implemented in the UK. The second one, as it was mentioned with OBE, if you compare everything that we discuss right now about open banking, I suppose only OBE shares the statistics in a meaningful way that can be used to assess the market performance, number of the payment initiation, number of account information, number of customers that are using open banking, and this gives guidelines. If numbers are not growing, something is wrong. So we can sit together and find the root cause, maybe change the regulation, maybe change the standard, maybe release new version, maybe put some clarification. And this is a critical one, because if we don't measure, there is no success. Because
absolutely. And you raised a really good point there as well around that authorization process for TPPs. I think in the UK, because of the adoption of a common standard and because of the regulatory environment and the means of authorizing TPPs, I think for a large part of the last 5 years, more than half of the TPPs in Europe have been based in the UK, and it has been a much more thriving environment because of that. And Kevin, the scenario you were talking about earlier, the ability to go to market, find a technology vendor to help you get something deployed quickly in timescales that aren't normal for kind of a tax authority. It sounds like you were benefiting from some of the really good conditions that were created. Is that fair?
Absolutely. And I think I've been a financial services commercial practitioner for many years, and you get excited and you want to get up in the morning when you're thinking about the tenders that your team are going to run, and particularly when it's all around innovation and stuff that's new to market or new to your client. And this was one of those where there hasn't been a payment vehicle introduced for quite some time. So this was quite novel. This was quite exciting, but actually also dangerous, because actually if you got it wrong and you hadn't done your due diligence, particularly with a large customer base, you could have egg on your face. So I think what helped us was when we pulled together the documents to go to market, and that, having done some soft RFI exercises previously, we were keen to focus, as you would expect, on the usual suspects of quality and cost. But actually, the framework that was produced by those on this panel as well included minimum standards that actually gave us already that sort of safeguard of minimum standards to expect in the quality. And if we think about today, there's only 294 registered fintechs who can provide open banking. We know them all. And having that minimum standard is one thing, but building to something that's uniform is something else. And I'll try an example of that. If I gave you all the same cooking ingredients and asked you to cook me something, it's highly likely that there will be some similarities, but it's also highly likely that there'll be dishes that I just wouldn't want to be served. Okay. In the instance of the UK, what we've got is actually parity and uniformity, which is really good. Unlike, as Helen suggested, our friends in Europe. So I think that's a really good thing. And I can't stress enough that it's good news that the API-driven technology is so easy to connect with, has been delivered so easily into corporates, like some of the clients I've worked with. And then the fact that you can do that in such a short period of time, I think what a lot of organizations need to recognize is it's not a big transformation project. It doesn't have to cost millions and millions of pounds to do. Quickly test, learn, and implement, and you'll find that there's fantastic value.
Yeah, I'd agree with that. And I think we've seen so many interesting use cases come to market. So I want to switch gears a little bit again. I think we've done a good job of highlighting some of the things that really went well. Central implementation entity, clear regulation, common standards, authorization regime, etc., etc. It's created a very vibrant ecosystem, but it's not easy going first. Kind of the pathfinder might take the wrong turn. There'll be things that you could do better when you do the journey the second time round. And I think there's a real opportunity for markets to look at, right, what are the great things it can build on? What are the things to do differently? So let's switch gear a little bit and think about what are the things that either got wrong or could be done better as we look at the approach in the UK. And by the way, we know now there are other markets, Brazil, Bahrain has moved, Saudi Arabia is moving. Again, and how are some of these markets building on those learnings and potentially leapfrogging? I think one of the interesting, Kevin, I'll actually come straight back to you if I may. You mentioned right at the beginning about kind of the attitudes of the banks at the beginning and the way this was brought in. And I think there was a sort of confrontational stage at the beginning because there was a hard regulatory mandate being enforced on some banks. There was a body of fintechs who'd been lobbying. And what do you think of some of the learnings in terms of the way it was initially introduced, you think?
I think if you're going to mandate something as a regulator, you need to ensure that those that are being mandated to are on the journey. And the key lesson here is that they're on the journey to fund the cost of the implementation, but actually not in terms of the delivery and the outcomes. So I think, and what we've seen from that and the fallout from that is that there is still a degree of inconsistency on how the banks manage open banking and process open banking transactions. And that's, so as an example, there may be differences in the limits of open banking transactions by banks. And that's because of their risk appetites. So whilst you have consistency, you also have inconsistency in the process and the authorization process. So I often just go back to, this was a lesson that was learned. How could the regulators do more in terms of consultation and white papers, which actually involve not just the banks, but I think a wider audience. And I think if that was done, I'm not saying, I've been on meetings with banks where we've tried to implement many things and everybody sits there silently, trying not to speak first. We need to get away from that. We need to show that there is value in this and future propositions and innovation. And I think if you can demonstrate right up front what that value might be, I think there's a better opportunity to work together as opposed to it's mandated.
I think there is a really important piece there about kind of the journey and winning hearts and minds of all of the right stakeholders. Personally, I don't think any market's completely nailed that yet. I think there's
No.
but there's certainly some learnings from the UK. I mean, Helen, again, you're a very passionate evangelist around the world about open banking and open finance. What do you think are some of the one or two of the things that actually in hindsight could have been done better or differently?
Okay, I'll give you two. One would be the business model, a more equitable business model. Chris touched on it before when he was talking about premium APIs. One of our regulators, the PSR, the Payment Service Regulator, are now going through a listening exercise to address that very point. So what you have is you've got a very well engaged ecosystem, and a bit of a shout out to you there, Hugh. You were instrumental in helping form the UK's ecosystem. So you have a very engaged ecosystem in the UK, very innovative ecosystem in the UK, where you've got the whole world looking at what happens. I think it's the business model needs to be equitable to all partners. And we, whatever has happened has happened. We need to move on and create a model that is palatable to the banks, to the fintechs, and to all those other players in the ecosystem. That would be the first thing. We had no way of calling that right because we were the first to market. Okay, absolutely no way. So this isn't a beating up exercise. The regulators acknowledge that, and we're going through a process of changing the dial there. But the next one would be looking at what they're doing in Brazil. On the 4th of May, they changed open banking to open finance. Look at what the Australian regulator, the Prudential Regulatory Authority have done with consumer data rights. They have gone immediately from, us having access over all of our data. It's true democratization of data. Again, I would argue it would have been too much for us all to take that on right at the beginning. What we haven't probably done is been fast enough to catch up on the open banking, on the open finance piece. And I do think that we will, unless we get a bit of a shimmy on, we'll lose our market gain on that one.
Yeah, I couldn't agree more. And I think we are seeing markets moving forward with broader regulatory agenda. Brazil's a great example, as you say, a kind of an open finance regime from day one. It is really good, though, to see banks have been shifting to start viewing this as a more commercial opportunity. We've seen NatWest come out with variable recurring payment APIs that are available to support commercial use cases. I think that's the start of a movement, and I agree. I mean, there were some kind of real challenges in the way things were defined at the beginning, though. I mean, Dimitri, I'd be really interested in your views around some of the things that could have been done better. I mean, we had things like the crazy 90-day reauthentication rule and locked into the RTS and things like that. What do you think of some of the key learnings or things that could have been done better?
I think it was rightly mentioned, for banks, it's like open banking in the beginning was seen as just cost center. So it's only expenses. You're sharing the data, you can monetize on it, and there is no visibility how you will monetize even. Yes, right now, after 5 years, we have started this discussion and implementing some use cases as VRP for monetization, but it's only in the beginning, yes. And for 5 years, it was like, why I, as a bank, should provide even any service, any SLA, any quality, invest in open banking, compliance, and user journey, and so on. What is the reason why I should do as a bank? It was no answer, and we have faced this attitude because, in the beginning, it was always when we have discussed it with the banks, it was following idea that we would like with a bank that will consume other banks' API as the first one, but we will be the last bank will open up an API towards other banks. But unfortunately, it was an idea that have shared common across all the banks, and they all be the last one who have opened up APIs and benefit from this. So it was like maybe a risk, maybe an attitude, afraidness of changes. and not clear visibility how they can, like how banks can monetize, how other players can monetize as well. And yes, you're absolutely right that open banking is just a beginning, because we have a lot of things that can be improved in terms of lending, insurance, investment, and so on. And this type of data is not even covered in open banking right now. It can be covered with commercial APIs. But what I suggest here, to have an same level field and playing ground in terms of fees, in terms of requirements, and so on, because there is markets where open banking is built on top of bilateral agreements. And if there is like 100 banks and 20 TTPs, it will be thousands of agreements, and it will be mess, and it will not fly well, like in Singapore. So it should be somehow, we should agree inside of the market how we will monetize, how things should work, that it should be common approach, that everyone happy to use and can predict the future, not just because there is contradiction between the requirements.
And actually, you raise a really good point there as well around just the complexity of some of this. So creating bilaterals between banks and third parties to do things. I spent most of my career in some of the big banks, and the process of bringing on a new supplier or a new partner and going through that whole sort of due diligence and contracting, I think the idea of putting in place hundreds or thousands of bilaterals would probably turn most bank compliance and due diligence and procurement departments white with fear. So I agree. I think kind of creating the right market enablers rather than all these bilaterals will be really important. I mean, Chris, I know you're continually going around the world working with regulators and others, looking at some of these learnings, and very, very busy in the Middle East right now as well, looking at some of these learnings and how to create the next benchmark and blueprint that takes the learnings from markets like the UK and does it much better. What do you think are some of the key points, and which are some of the markets that you think at this point in time are getting it right and taking a leap further?
So yeah, I think the main focus of open banking and open finance should be to actually provide benefits to end personal business customers, and that's why it's important that whether it's a mandate or a premium API, that it's there to facilitate these use cases. So I think that's kind of the overarching principle. But I want to talk a little bit more about the actual technology, because what we've seen hasn't worked very well across Europe, particularly when you look at the whole of Europe, is the way that open banking has been implemented. And I would argue that's largely because of two things. One is a lack of regulatory understanding and strength in terms of driving consistency, but also it's the lack of incentives or the misaligned incentives between particularly for banks. And I think Kevin and Helen and Dimitri have all touched on those points. But in terms of consistency, I think the key learning really is that we, in new markets that are adopting open banking, open finance, there needs to be a mandated standard. There's no point. It's a bit like being half pregnant. There's no point doing this if you're not going to do it properly. You absolutely have to have a mandated standard, and it has to be implemented properly. And if firms are mandated, then they have to implement the standard. If they're not mandated, they shouldn't be allowed into the ecosystem until they've done it properly. A market that's doing that well is Brazil. They've got a very strong, highly mandated standard, very strong conformance and certification regime. They're doing a lot of stuff well. There's still some issues there in terms of there aren't actually any fintechs in the market. Yes, it's all banks acting as fintechs, consuming other banks' APIs. But this is I think the key point. Make sure there's a strong, strong, well-defined standard. Make sure it is implemented well. There is continual oversight and requirement to be certified. You're talking about playing with customers' finances and customers' data here. You need to make sure that all firms operate in a manner that's secure. but also you need to remove all the friction that we've seen in the UK and Europe with, fintechs trying to connect to lots of different banks who do things differently. This doesn't need to be the case, and it's actually not complicated to do it properly anymore. So, the regulators, I think, need to be in different markets, need to be much stricter with banks and fintechs about adopting the standard and doing it properly.
Yeah, it is. It is interesting. It was interesting to see the strength of mind of the regulator in Brazil. I mean, they've mandated a single standard. They've mandated conformance testing for every bank. I remember meeting with the central bank just as the world was going into chaos with the pandemic, and I said to them, this was in Sao Paulo, I said, assuming this is going to slow things down, and they're like, no, we're going to make this happen. This is a more important time to drive open banking, and it was impressive to see. One of the things we've talked about in this, though, a number of times is this sort of market balance, commercial balance, winning the hearts and minds, particularly of the banks, so that they're really incentivized to grab this and do it well. My personal perspective is this is a highly strategic opportunity for banks to distribute products and services in a way they've never done before, because they don't have to use their own branches and apps to do it. I don't know if any market has yet completely succeeded in that, winning the hearts and minds and getting the right sort of balance within the ecosystem. Helen, what do you think?
I think it's a really good question. Given that I'm a founder of a global community, I'm not supposed to have favorite children, but if I had to name check of a bank, I would come back to NatWest as you did before. Have they won the hearts and minds? They certainly have been front and foremost with working with the fintech. So I think probably yes. I mean, and Chris is the guy to comment on this one. My understanding is that their API architecture has made implementation with the banks, the fintechs, a lot smarter and quicker. But if you look at what they're doing with VRP, look at how quickly they got to market with Go Cardless, and so you have NatWest Go Cardless and a charity. So so they've now got open banking into the third sector. So I think that wins the hearts and minds. If you want one use case that shows that VRP is here and is a game changer, that would be the one. If you want the same use case to show how the ecosystem collaborates, I think that's a perfect one. You've got Go Cardless, who are superb at payments, and also TrueLayer have worked on VRP. You've also got Token now, who are doing a huge amount in this market with sweeping. So everybody is working with the banks, and it's not just NatWest. You've got HSBC doing a huge amount of good in terms of financial inclusion, Lloyds, Santander, etc. I feel I need to name check them all, actually.
I don't think we've got time for you to go through everyone, Helen. But no, I do agree. Actually, I think we have seen the banks in the UK have been through a bit of a roller coaster ride. It was a bit tentative at the beginning, and we're now seeing them grasping it. They've got strategic teams. They're driving this as a commercial opportunity. They'll be seeing revenues. There was a great question that came into us. So I wanted to pose this one. So there's a question around for markets that haven't moved yet. What is the right approach? Is it a regulatory-driven approach, market-driven approach, both? I have a very strong view on this, but Dimitri, I'll perhaps get your perspectives on that first, if I may.
In terms of competition, it's better to use a regulatory-driven approach, just because it will be the same play level field, let's say, because I have faced market-driven approach. When you enter the market, you don't have enough clients, usage, and so on. Banks just don't speak with you. They ask, you should have 1 million customers, but how can you build 1 million customers without any usage, without open banking, without connections, without agreements? And it's egg and chicken problem, yes, here. and this stops the innovation. So my choice, regulatory driven.
Okay, and I'll perhaps get a view from you on this one as well, Chris, if I may, because again, I know it's a conversation we have regularly.
Yeah. Good point. I haven't. Yeah, I'm not really sure, if I'm being honest with you. I can see both sides of it. Sorry. I got a bit distracted then, Hugh. Sorry.
No worries. Well, listen, let me help you out, because oh, sorry, go on, Helen.
I was about to say, Chris, I think it comes back to the same. It all comes back to the same in the end, whether it's a market-driven approach or a regulatory-driven approach. At the end of the day, you will get to the same point in the end. Okay? Do you not think, Hugh?
So my personal view is I think there needs to be both in many instances. So if there's a regulatory catalyst, it's a catalyst, but it isn't the thing that defines the end state. That's about the market taking it further and driving commercial outcomes that work for everyone, but with a regulatory framework to ensure that it's got the right control.
So I think
in some instances where it's a market-driven start point, you actually need the guardrails and some of the frameworks to make sure it doesn't go off in directions that aren't interoperable and that create customer risk and all of these things. My personal view, I think it kind of has to be both. Chris, sorry.
I think so. I was kind of forming my thoughts there. I think when it comes to access to data, I think there's a kind of opinion which is widely shared, and I think I'm sort of on board with this, that ultimately if it is the customer's data, and by the way, not all data that banks and FIs hold about the customer is the customer's data. Some of it's derived data, like credit scoring, or data that isn't necessarily the customer's data. But if it's the customer's data, then the customer should have a right of access. Whether that means the customer's got the right of access via an API and can give that data to other firms free of charge, I think there is also an argument that says if banks provide data in a more real-time service, regular updates, real-time messaging every time there's a transactional update. So I can see there's a case for not all data that's owned or held about a customer should be provided free of charge, but I can see there being a strong mandate that's in everyone's interest to provide this kind of wider data sharing economy. When it comes to payments, I think it varies depending on which market you're in and what the payment rails and are. In some markets, banks, the central bank takes the cost, and banks make interbank payments on a faster payment rail without incurring charges. But in most markets, there's a cost that banks incur for making and even receiving payments. So, for banks to offer payment APIs free of charge to the market is an interesting one. I think the key here is the balance is going to be different in every market. I think you need to have that balance. I don't think everything should be mandated, but some stuff definitely needs to be mandated to get that catalyst. But also where you've got a sort of a good balance, where you've got this concept of premium APIs. I agree with Dimitri's comments earlier. I think you need to have some way of removing the friction of having lots of bilateral contracts between banks and third parties. So some form of scheme or standardized process for banks and third parties to engage around these commercials makes a lot of sense.
Perfect. Thank you, Chris. And I think we could go on for a long time, but I don't think we're going to be allowed. We've got about a minute left. So what I wanted to do is ask, first of all, thank each of you. This has been a fantastic conversation. But ask each of you, you kind of one or two words for a new market. What's the big lesson? Kevin, can I start with you, please?
Awareness. That's my one word. There's not enough awareness. Yeah, you can have the best regulatory or driven solution, But if the consumer doesn't know what open banking is, what's the point?
Interesting. Thank you. Dimitri, how about from your perspective?
Measure results and fix the root cause.
That's a good point. What gets measured gets managed. I've heard that many times through my career. Chris.
I think getting the right incentives for everyone from the start, I think, is absolutely key to this. I think if banks are looking at APIs as an important commercial channel for them to drive new services, then I think they'll implement APIs much better, and everyone will be better off.
Yeah, I know that's one thing we talk about a lot. Kind of a clear view of outcomes, and then the right incentives to get there. And Helen, it wouldn't be right if I didn't give you the final word. What do you think?
The final word, if we use a word, is collaboration.
There we go. I like that, and I don't think it needs building on at all. So, listen, we've reached time. I wanted to thank you for what's been a fantastic and engaging discussion. We haven't had time for Dimitri to go to the back and play us a little tune on his grand piano, but maybe next time. So listen, thank you everyone, and for the audience, I hope you enjoy the rest of the day.
Thank you. Bye-bye.
Thank you. Thank you.
Bye.
Thank you.
Thanks a lot, Hugh, for that moderating that wonderful session. Thanks a lot, Kevin, Helen, Chris, and Dimitri. It was very insightful, and you were your opinions were quite frank and insightful. So moving on, the next session on this stage will be Open and Embedded Banking, a differentiator in the Middle East. To provide his thoughts, joining with us is Matthias Bell, API strategist at Software AG.
Thank you. Yeah, I guess I take it away there. My name is Matthias, and I'm going to talk about the opportunity for differentiation via open and embedded banking. I want to start with an example. So here is Mike. Mike is a busy professional. He travels a lot, frequent flyer, and he likes to take care of his finances and look at his bank accounts and the transactions that are coming in. But he has several bank accounts, and it's quite a hassle in the short time that he has to check all of these different bank accounts on his mobile app. So his airline has provided a solution for him. Yeah, so it's his frequent flyer app that now has multi-banking capabilities. So he can log in to several of his bank accounts with just one click. So the way they have built it is actually, this is the Airline Loyalty App. And of course, this Airline Loyalty App has some airline APIs that it uses from the airline to make bookings, to look at his reservations, and to see his points. But it also has the connection to banking APIs of all the different banks. So he can see all his bank accounts in one view. Now, the interesting thing here is not so much that there is multi-banking and several banks viewed together, but the interesting thing here is that it's the airline that is providing this financial services capability and this financial services app. It's not a bank, not a traditional player of the financial services industry, but an airline. Now, how is that possible? Right? We're used to the fact that financial services apps and products are provided by financial service players. Now it's possible with open and with embedded banking. So the value chain is very interesting here. There is a bank somewhere involved here, one or several banks, and those banks have the transactions, they have the data, they have the payment capability. And those capabilities are exposed to to players in the market via an API. They are wrapped as an API, and the very distinctive feature of an API is actually that it is integratable and composable. That's why I like to represent it as a building block, because now an API consumer, an airline, uses this API and builds apps with it. And the way they build app with it is the same way as they would, build a Lego figure out of Lego building blocks. They just put them together because they're integratable and composable. And out comes, after a very short time, the multi-banking app, right? And this multi-banking app is then given to end users like Mike. Okay, so that's the value chain that's made possible by open banking and by embedded banking. So the airline can now expose banking functionality via an API. Value flows in this value chain from right to left. So it's the data and capability of the bank that's the source of the value. It's then exposed to the airline. The airline adds value with this aggregation and multi-banking capability and delivers it to the end user. Now, the end user is the receiver of all of this value. And now there's the possibility for compensation, right? He can compensate now the airline, whether it's in monetary terms or in other terms, for the value he has received. And also the airline can compensate the bank. This is possible because here in this example, we have banking APIs, open banking APIs. And open banking is a concept that is now basically a topic and a phenomenon that we can see all around the world, right? You have heard this today before. There is a regulatory approach to open banking and a market-driven approach to open banking. In this world map that you see here, I have colored the countries that are taking a regulatory approach in green and the market-driven approach in yellow. So you can see there's both approaches are actually out there, and the concepts are pretty much the same, but the details differ, right? Who is the driver? Is it the regulator or is it the market? Legal frameworks, they are depending on the jurisdictions. API specification, they might be similar, but the details are different. Also, the scope of banking products is different from jurisdiction to jurisdiction. And also, very importantly, the timelines are different. The timelines for implementation. As you've heard, UK has implemented open banking several years ago. So we can learn from what they have learned by operating and implementing open banking. So we can also see that there are different starting points for different countries and for different banks in those countries. So a typical starting point is an internal banking API, right? And this internal banking API that might cover a lot of things that your mobile app, your banking app requires, and you don't offer this on a portal to your partners. But then there are regulatory APIs, right? That's the first step here at present, where we open up in terms of open banking or even open finance, those APIs that are mandatory for banks to open up where there's a regulation. There is, however, typically when there's a regulation, no possibility to really leverage that for business or at least to monetize those APIs. So what banks typically do is they offer premium APIs, and you've heard that as well in the context of open banking and open finance, and they offer the possibility, because they are not regulated, also to monetize those APIs. So they are typically very attractive for the banks. Now, this is not the only starting point or the only road to get to premium APIs. Some banks or some jurisdictions that don't have regulation, that are market-driven, they jump directly to the premium APIs. Now, what happens next after premium APIs are offered? Well, we can already look out into the future and we see a couple of developments there. One development is that in addition to those premium APIs, banks start to offer banking as a service and embedded banking. And here as well, there is the possibility to make money with those APIs. Also, there are some financial institutions that jump directly to the banking as a service and embedded banking proposition. But what's very interesting is that no matter where you are at and what your starting point is, you basically always have the same technology infrastructure that you're building your solutions with, right? You have some API infrastructure that you need there. Now, what are basically the dynamics that are playing out, no matter which starting point you have, where we want to understand how the future looks like for open banking and embedded banking. And there I have a very simple timeline, past, present, and future. We will look at what happened in the past, what is happening right now at present, throughout the world, and then what is very likely to happen in the future for open and embedded banking. So let's start with the past. In the past, we were focused as a banking industry basically on efficiency and the mass market. We had a lot of different banking products. They come in all shapes and sizes. And what we did as a banking industry is we bundled them together as a mass market banking offer. This is very efficient to do these things. At present, now we observe open banking and open finance. So on a technological level, we take this mass market banking offer that was created for efficiency reasons, and we take it apart, right? Technologically, we unbundle this big mass market offer, and we unbundle it in the form of APIs. For example, you have a credit card API, checking account, saving account API. All this is an open banking API, right? You can do payments on each of those of these accounts. Now there's an extended scope of open banking, so to say, where you look at other banking products. So for example, as a retirement account, a trading account, mortgages and loans, and the big thing you call open finance. But the important thing is now we have a portfolio of APIs that unbundled the mass market banking offer. Now, if you look at this portfolio of some of the banks in markets that have done this previously, you can see that there is some APIs that are regulatory, that are required, where they are required to open up those APIs. And there is a number of APIs that we call premium APIs that they want to open up, right? These are market driven, and you can combine those two approaches, whether it's regulatory and market driven. Now, what's very interesting, I think, is that when you look at some of these portfolios of banks, that the majority of APIs in the portfolio is actually a premium API. So here is one bank that has structured the API so that they have four regulatory APIs and then 9 premium APIs. So the majority here is premium APIs. If I look at another bank, the difference is even bigger, right? They have structured their API so that their regulatory API is just one, and then they have more than 30 other premium APIs. Right? So we can see that premium APIs are very interesting to banks. And while the regulatory APIs can be a starting point or can have this initial spark to get started with opening up APIs, banks typically go beyond whatever is required, and they want to open up more and provide premium APIs. So on our timeline that I started with, we have seen so far that in the past we focused on efficiencies and we bundled banking products together into a big mass market banking offer. So when you had, for example, a mortgage, then you were very likely to also have a checking account in your credit card with exactly the same bank. And that was a result of the bundling. Now at present, we see actually an unbundling where this big mass market offer is taken apart with open banking and open finance. So we get kind of a pendulum swing where there was first bundling, now we see an unbundling. And when we look out into the future, what are we going to see there? We're probably going to see the pendulum swing back in the other way, and we're going to see a rebundling. So it's again a bundling, as we've seen in the past, but probably it's a very different type of bundling that we're going to see in the future. And this is enabled then by embedded banking. So what do I mean by a very different type of bundling or rebundling? Well, the reality right now, after we have introduced open banking or there were premium APIs being built, is this big portfolio of APIs that banks have, right? It's the financial services industry that has a large portfolio of APIs. Now, other industries are doing the same. They're also opening up. It's not only the banking sector. There's logistics, insurance, accounting, business management, communication, transportation. A lot of industries are opening up, and they're also building APIs. So it's these colored blocks are representing APIs from different industries. Now, the possibility there for an innovator is to rebundle not only those black APIs that represent the financial services industry, like we did in the past. We just bundled financial services products together into mass market products. Now we can take colored building blocks from other industries and bundle them together. And we'll get these niche market offers, embedded banking offers that are very specialized for a specific type of customer, very narrow, but are much more meaningful for this specific type of customer. And of course, there's a lot of rebundling opportunities, right? You can have so many different combinations of these APIs. All right. And all of these are embedded banking offers. Let's look at the couple of examples here. What could that be? So embedded banking for SMEs could be coming from an accounting software provider. Here's QuickBooks. QuickBooks provides accounting software for small businesses. And when you buy their software product, you also get a bank account and a credit card. That's possible because the banking product is now kind of rebundled with the software, right? And there is, of course, a bank underneath that provides that service. But the SME accounting solution consists of the accounting APIs, the core functionality that QuickBooks provides, but it also contains banking APIs, so you get a bank account together with your software. The same is true for taxi, the taxi business for Lyft drivers. So Lyft drivers have the Lyft driver app, where they see where their next customer comes from, and that's the taxi APIs that are provided by it. But now they can also receive their payments basically directly into their bank account and use this bank account directly with a credit card that's associated with it. So there is a banking functionality baked in to the Lyft driver app. And the same is true here. Another example for real estate owners, another very narrow sector, but real estate owners can get special types of banking products that also take care of their real estate valuations. So you have a real estate app consisting of real estate APIs providing those valuations of their real estate, and then banking APIs that do the typical banking stuff, but all bundled within this special type of app. These were a couple of examples for these premium APIs or embedded banking APIs, and the possibilities of how the market can evolve when those play out. So how do you build those premium APIs and embedded banking APIs? A couple of things we need to look at. Several dimensions, actually, we need to look at. Right? We need to look at the customer, we need to look at the product, and we need to look at how can we make money with those APIs. And it's kind of three-dimensional. The first one is the customer segment. We can look at the use cases or banking products and the monetization strategy. We can slice it basically in all three dimensions. So if we slice it by customer segments, you can look at what are actually the use cases for SMEs, what are the use cases for retail, for corporates and institutions, if I provide premium APIs. So this is one way of looking at a potential development of premium APIs. What are basically my customer segments? And one thing that I thought is really interesting from UK is that, well, if you think about open banking, you think, hey, open banking is primarily for the retail business. But in one of their publications here, they said that so many SMEs are actually using open banking. So it is, it can be quite interesting to look at these learnings from other countries to say which customer segment should I actually target and which has high demand for open banking solutions. Now, another way to segment basically this space for premium APIs is by banking product. I can look at my product portfolio that I have as a bank, and I can think about which of those products would be profitable to open up, right? So I have different use cases. Here I did some study where I looked at the public API portals of different banks, and I counted basically how many APIs or which type of API they are all providing. So typically banks provided credit card API, customer API, FX API. This was the premium API that's most commonly used by banks. Another very important way to segment this space, the design space for premium APIs, is the monetization strategy. And what can you do? You can either not monetize the API, maybe not so interesting. You can directly monetize the APIs, or you can indirectly monetize APIs, right? And I will look at a couple of examples here as well. So direct monetization is the principle that we know from other types of businesses. You want to have access to something, then you need to pay for it. Indirect monetization is a little bit more intricate. So let's look at indirect API monetization. How does this pattern actually work? You start with an existing banking product, right? So this product here represented by this package could be your bank account or FX trading functionality, foreign exchange trading. And these products today are already monetized or paid by your customers, right? So they are actually providing the revenue via fees. Now, with indirect monetization, you put an API, which could be a premium API, next to this product. Okay. But the interesting thing is, and that can be counterintuitive, is that this API is not directly monetized. It is for free. So why would you do that? You do that because the API helps you sell the main product, the main FX or account product. And there are several ways of how the API can help you sell the main product and therefore monetize the API. All right, so let's look at a couple of examples for how an API can help you monetize. These patterns are, and there are several of them, would be API as a feature or API as a sales funnel. Those are the two that I want to look at here. But there are more, and we can discuss those other types of API monetization in a banking context separately. Just reach out to me. So the first pattern is that the API is a feature of the product, right? A product like a bank account has several features, and there is an API, and the API is another feature of your product. Why is it another feature of the product? Because, for example, this API would allow a synchronization with the accounting software, something that's very interesting for SMEs, right? So the API allows you to get all the transactions that happened in an account and take this information over into your accounting software or outgoing payments that you have already in your accounting software to push them into the banking system. Right? Accounting software providers are already making basically commercial with this or take this as a feature, their connectivity to banks, and so do banks, right? So banks also say, hey, we have connectivity to some accounting software, and therefore our product, the SME bank account, is more valuable, and it's done via APIs, even though those APIs are not directly monetized. It's just that it gets the API provides a more interesting banking product. The second option for monetization is that the API helps to sell the product. The API is basically a funnel that helps you bring leads that are going to buy the product. So how does that work? For example, your product is a foreign exchange. You offer FX trading functionality via an API. So here is a real FX trading API that I found on one of the bank's websites. And now you can have other software providers that are using the FX trading API and therefore bring new business to the bank by using more FX trading and making it convenient and making it more convenient. So what I'm going to look at now is the last option for monetization, and that's direct monetization. You probably already know direct API monetization. In direct API monetization, that's what you have in banking as a service or embedded banking. There, the API is actually the product, right? they are identical. API and product are identical, and therefore I can directly monetize it. This is done, for example, by companies like Twilio or Stripe. So we have seen now several options for monetization, and this was several, and this is very important for creating premium APIs. What I want to give you on the way as key takeaways are actually that you need to move beyond compliance. So even though compliance is currently being built up in many countries in the Middle East, it's very important to already start thinking to move beyond compliance and focus on premium APIs, because here you have the possibility to monetize. Open banking is not an end in and of itself. You need to think about those rebundling opportunities and how you can leverage them for your bank. And then, well, you can already think about directly and indirectly monetized APIs and start brainstorming for your premium APIs. Thank you very much. Maybe you have a question.
Yes, Matthias. So I appreciate your points on the different how banks in Middle East can differentiate themselves in the open banking journey. So from your experience of working in other parts of the world, which industries do you see favoring or adopting the embedded banking more?
So I think there is a whole range of industries that can profit from embedded banking, right? So examples we have seen are software industry, right? So the accounting software provider takes embedded banking as an additional revenue channel, right? So when QuickBooks or Intuit, who owns QuickBooks, integrates embedded banking into their core product, for them, this is an additional revenue stream that comes in via bank fees and transaction fees that occur on these accounts. So it's typically software-driven industries, and it can be that there are, at the core software industries, or they are from another industry, but they have a very like a focus on software. They take a software perspective to an industry. Examples are, a Tesla takes a computer science or a technology perspective into the area or the industry of cars and automotive.
Right.
So
Right.
yeah, that would be one of the things to
Great.
consider.
Okay, right. Yeah, great. Thanks a lot. Thanks for joining us at Apidays Dubai and Middle East and sharing your views. Thank you. Joining us next to talk about should I buy or build open banking is Kevin Guest, a financial services commercial advisor at Accenture. Hey,
Hi, how are you?
Hey, good. Thank you. Welcome back, rather. Yeah, it was a wonderful panel
Thank you.
discussion.
Yes, it was a good panel, very insightful.
Yes.
But of course, the main things that everybody wants to know is should they build or should they buy it? And what I don't have is a sense of the audience. Are they bankers or are they fintechs? What can you do? You have a bit of background on those who are on the call today?
So it's a mix, actually. It's a mix.
Okay.
Yeah.
I'll try and keep it broad then as much as possible.
Great.
So
Thank you.
I've pulled together. Thank you very much. So I've pulled together a quick sort of presentation, and these are just some of the highlights of things to think about. So I'll cover who I am and the big use case that I've looked after. We'll just quickly refresh on open banking. I'm sure you should know by now, but it's always worth taking a different perspective on it. And then we'll jump straight into should you build or should you buy. We'll consider some of the macro factors that you need to think about. And then we'll think about some potential strategies, some successes, and what that could mean for you. So moving on. I'm not sure who's driving the slide. I am. There we go. Right. So I'm Kevin Guest. I've got 25 years within financial services as a commercial leader. 15 of those years have been with two major high street banks within the UK, where I've led many initiatives on within data, payments, and other financial services. Equally as well as that within fraud. And as everybody knows, fraud is a growing beast. For the last 2 years, I've worked specifically with a public sector client where we have implemented the biggest use case on open banking. And to put that into perspective, this particular client is the largest payment acceptance company or institution in the UK, accepting over £650 billion a year. And so when we looked at open banking, what we had to think about was actually, what's this going to do to our payment vehicle estate and the processes that exist already? So a really good use case, and we'll talk about some of those benefits towards the back end. To implement open banking, and you'll see the theme that thinks about this all the way through. There has to be a clear and defined vision and a clear and defined strategy. And so what I find often is that before we even get onto the conversation of should we build or buy, is there actually an appropriate strategy? And 9 times out of 10, there isn't. What you've got is a lot of excitement by the market about actually we should do this. We shouldn't lose out against our existing customer base, but actually the critical thinking and the challenging thinking hasn't been done. So I spend a lot of my time working backwards to help everybody go forwards and very quickly. And when I talk very quickly, this doesn't require large investment. What you'll find is that this is actually quite quick to do and quite cheap. So hopefully that's given you a bit of overview as to who I am. So jumping back into Open What, as I aptly call it, it's effectively a poor name, first and foremost, open banking. Nobody understands what it is. There's very little in terms of consumer awareness. But actually at the heart of what it's trying to do, it's bringing together technology, data, social and digital change, and putting that into a way in which you can interact with customers in a seamless, frictionless way. Historically, we all know that to interact with our bank or our financial needs, we would typically just be subject to whatever solution was provided by that financial services organization. So whether that was telephone banking, and that still exists, whether that was a crudely put together app, whatever that might have been, they were the only methods. With open banking and consenting for the sharing of your data, there's so much more possibility. And on the right of this, I've illustrated the difference between the two very simple use case or approaches, I should say, which is the payment initiation approach. So how do you initiate a payment? And so that's buying things. And then account information. So how can I use real-time account information to help me inform about my financing decisions if I were a corporate to a customer, so a B2C environment. And can I just ask, if there are any questions, please do just put them in the chat, and I'll try and answer those as I go along if they're as they're relevant, or if I feel that actually something else is coming along, I'll address that as we move a little bit further. So jumping straight into the meat, should you build or should you buy? I've sat in front of many CFOs, CTOs, COOs, and they all talk about capability and capacity of existing teams and wanting to control and to build something themselves. And actually that's very courageous. And I use that word courageous because actually it's an unknown. It's not a known quantity as such, particularly in non-regulatory driven markets. In regulatory driven markets like the UK, there are standards. And even with those standards, and I gave the analogy on the previous panel, which is you've got a set of ingredients, and I go and ask you to go and cook me something, but actually what comes out of that is going to be, in a regulated environment, pretty similar, but there will be nuances. But in a market-driven environment, you can serve completely different dishes. And so to build or to buy is a really interesting question as to what type of market are you in, first and foremost. But as I say, CTOs will typically say, actually, we've got the capacity. And it's all well and good having the capacity, but do those resources have sufficient knowledge to cover compliance, IT architecture, risk, governance, security aspects of all the data that's being shared between the parties? Because of course, if anything is wrong, there are substantive fines for not doing it right, and nobody wants to be in that position. And quite frankly, for fintechs, for smaller banks, challenger banks, it could actually just close the bank entirely. So there's a huge risk. Counter to that, there is a lot of fintechs who have established themselves and they've got good practices. So there's an opportunity to potentially test and learn and integrate in a risk-averse way. So typically to build is costly. Having worked in the public sector for the last 2 years, if we talk about an innovative project, we prove the concept. That takes 9 to 12 months. Post proving the concept, we then go to build. Typically that is, for a large program, 12 to 18 months. The important part here is you're burning cost and resource just to get this thing up and running, when actually you can go to and learn from existing third-party providers who already quite quickly can integrate and do all of the heavy lifting. And of course, what you then have is a choice. How much do you do with them? How much do you control? And of course, control comes in many aspects, but the thing that I think most organizations who want to have open banking as part of their payment vehicle process, they want the control over the UX and the customer processes that fall behind the payment initiation or the account information services. So there's a lot of advantage to go and use existing setups to learn and then to determine, based on size, volume, what your next steps are. So we've quickly touched on the complexity. It is a significant undertaking. It will take time. And most importantly, you're going to have to stand in front of somebody and convince them that you want large amounts of investment that should be prioritized for this activity. And often, what is the unknown in this is the return on investment and the time frame for that return on investment. And one of the biggest issues in return on investment is awareness. And we talked about this in the previous panel as well, in that consumer awareness isn't there. If I said to most of the folk here, go home later tonight and talk to your families and ask them, do they understand what open banking is? You'll get a variety of responses. So general awareness at consumer-led level is poor. At corporate-led, that's slightly different. And that's being championed by many of the banks who are pushing forward the opportunity to work symbiotically in multiple marketplaces. Another area of complexity is the regulator and the regulations. Again, in the home market of the UK, the regulator is operating at an extreme pace of change. But just bear this in mind. Open banking started 5 years ago here in the UK, and we're still touching the sides. And to give you a bit of volume on that, the public sector client I work for currently processes, which is the largest payment acceptance company in the UK, or institution in the UK, processes £650 billion a year. And open banking currently only represents 5.5 billion, so less than 3%. So there's a long way to go to be equal and to challenge existing payment vehicles, which I suppose is good news for card providers, card networks, and other institutions at this stage. But change is coming. Obviously, we talked about cost. If you're burning resource and you've got a team on standby to go through IT issues, changes that are brought down through the regulator, security risk, data monitoring and harvesting and analytics, it's a big cost to burn. And again, there's no guarantee on the return on investment. And we've quickly talked about consumer driven. It isn't there yet, but this is moving very, very rapidly into a consumer driven marketplace, whereby consumers will expect to be 24/7 connected and will be expected to integrate with multiple marketplaces and multiple services in their end-to-end journey or their end-to-end daily lives. So it's not something that you can just say, actually, I'm not interested in. This is going to happen. And the question is who's going to be one of the first adopters? Stepping back a little bit, this digital movement, certainly in the UK market and actually globally, has been impacted by some of the factors such as social side, the pandemic, in UK and Europe, the Brexit as we called it, so leaving the EU economy. So there's a lot of factors happening, and open banking is just one of those small items, one of those small macro items that are happening against a micro environment that is constantly changing. And it's worth just quickly looking at this. You've got the four pillars: the regulatory, the economy, the social, and the technology. But there's so many new tools and innovation happening, and that's really good news for all global economies, in so much that there's a lot of investment, there's a lot of mergers and acquisitions. So it's an exciting time to be party to this. So of course, because there's so much going on, you really do need to think about whether you should build or buy, and whether actually, am I building something because I can, or actually, should I buy something because actually it's a lower point of entry, it's a lower risk, and it allows me to do some of these other activities, which I know, or focus on some of these other activities which I know are also going to impact my business. So what we do as consultants is we spend a lot of time working out, well, what is your strategy against all of these macro events that are occurring, and how can we ensure that actually against your strategic goals and objectives, that actually open banking is going to add value and provide the right impetus and impact to your organization. And I think this slide draws out that there's so much going on. So you've got payment architectures constantly changing across the world. You've got, everybody's heard of blockchain and distributed ledger technology, but now it's being implemented in existing infrastructures, and those legacy infrastructures are being changed. You've got, on the other side, you've got a connected society, which I talked about. So there's lots going on, and this is all being driven by new standards in API connectivity and connections. And I'm sure that there are much better experts than myself who can talk about connectivity and APIs. And I did hear about I was watching it with interest, that last presentation about ultimately, how do you monetize this? Because that's why businesses want open banking, because it's going to monetize something. It's either going to produce more margin, which is fantastic, or it's going to produce a new revenue stream that doesn't exist today. So this slide is really interesting, because often when I sit in front of CTOs, CFOs, and COOs, the one question they really want to ask is, where's the benefit? What's it going to mean if I invest? Whether I build or whether I go and buy, what's it going to mean for me? And for my public sector clients and some of the other clients that we've worked with, essentially what we've got here is a series of values and impacts to those values. So one, very simply, it's an alternative way of paying. The last time a new payment vehicle came out was, I think, about 20 years ago with contactless. And I still remember the Barclaycard advert for that. And now contactless has only just started to evolve again with new payment limits. But the good thing about open banking is, because of the way it connects and draws on data that exists with that customer, you get 0 errors, and that's extremely important. And to put that into perspective, the public sector client I worked for had over 2 million errors a year. 2 million errors a year. That's substantive. But with open banking, nearly 14, 15 months into the process, there has not been a single error. Not even a single call to the customer services team saying, we've got a problem. Nothing at all. Not a single other payment vehicle can boast that statistic. So it clearly works. And it works because it's consented data. Obviously, it's better secure, and with less mistakes. What you also are able to do is to pre-populate, but give the opportunity to the client to update some of those fields at the same time. So it's interactive, which is absolutely fantastic. If I go on to the right-hand side of this page, the statistics in 1 month of introducing to public sector 12,000 new users in 1 month, 15 million revenue throughput. You know, today, if you go to the bottom of that slide, it's 5.5 billion throughput. Okay, 5 million new digital users to the UK economy. So it's made a significant impact. But I remind you, it's less than 3% of the overall payment acceptance vehicles that we have. It's going to grow. So whether you choose to build or buy, there's a lot of debate, but ultimately it comes down to your strategy. Ultimately, it comes down to what you're prepared to control. Ultimately, it comes down to the volume that you have in terms of transactions that you might undertake. And this slide articulates some of those decisions that one could call winning strategies, if you will, and taken from Boston Consulting, which effectively, really and clearly shows that there are different ways in which financial services, and in this instance it's banks, can integrate with these new ecosystems and marketplaces. So are they at one extreme, creating a brand new business, or are they on the other extreme, really just integrating with existing markets and offering new services or integrated services with those customers? There is a question, so I'm just going to pause. Is there a question? Sorry.
Yeah, Kevin.
Okay.
So this is your experience, and what you spoke about is predominantly from an HMRC's point of view, right? What you did for HMRC. So from that
Correct.
perspective, I have a question on has the HMRC seen any increase in compliance? Because tax is something the non-compliance part comes into play, right? So because it's seamless, because it goes from my account and automatically. I mean, do I end up paying tax in a more? Do I become a better taxpayer
A
in
better
terms of
taxpayer. It's an interesting question, and I'm sure you do pay your taxes, and that would be a different meeting. I think, or I'll just bring my friends in. So I think the answer is can be segmented into several factors. From an open banking perspective, the critical thing here is ensuring that the process of moving data from one party to another is done in a secure way and is done error-free. And that's what open banking can bring. So a really simple example is using a traditional bank transfer method. I've already set up my sort code and account number for the payee. It already has last year's reference number. I put the amount in and press go. Of course, that then becomes an unallocated payment. And as a consequence of that, we then have caseworkers trying to work behind the scenes in connecting the dots for that payment against the wrong UTR number. What do we do? And ultimately that leads to a heavy deployment on resource at peak time when tax is due. Open banking solves that problem because it connects through APIs to the UTR, so unique tax reference database, and pulls that information in first and foremost, and then presents it back through the journey. And of course, the customer is in complete control of the consent and the approach. So the second part I just probably draw upon is awareness. So there aren't any complaints, but equally awareness is low, and you see that in the numbers that I discussed. And of course, public sector hasn't gone out and done a big marketing campaign that like you'd see the banks do. They haven't gone out and tried to sell open banking as the newest way to make payments. They've simply just let it organically grow. So if you can imagine that you've gone from, we're now month 15, we've gone from nothing to 5.5 billion value in 15 months throughput. That's an amazing achievement. But more importantly, bringing on board 5 million new customers who may or may not want to have digital IDs with us. So you don't need a digital ID to affect a open banking payment in for the completion of tax. And that's another really positive factor that they've decoupled, so it can be used, but also you don't have to go through the digital identification process.
Okay, yeah, got it.
So are there any other questions?
No, nothing else. Yeah.
Okay. And how are we doing for time?
Yes, we are. We have overshot the time, at least 3-4 minutes.
Oh, okay. I think I'd like to finish off in so much that there is no sort of silver bullet as to whether you should build or buy. It really comes down to the organisation and the appetite investors. What I would say is that there are a lot of good fintechs. There are many opportunities to work with them and to test and scale to your appetite and to your investment criterion. There's also a lot of experts in the market, which I find quite staggering, because actually open banking is less than 5 years old in totality. There's very few who have delivered substantive use cases, but awareness is growing, and folk like myself and others who have been on panels and individuals, they're really trying to promote the adoption of this new technology, but also future technology that's going to come downstream. So I'd end by saying there are some absolutely excellent advisory services out there who claim to know everything, but really just question, if you are going to use consultancies, what have they actually delivered? Can they demonstrate that volume and capacity that's been delivered to any form of substantive scale? My personal focus is around helping businesses grow and expand their existing strategies first and foremost. Open banking is one of those strategies that has some traction at the moment. I'm sure it'll be something else soon. But whilst it's here, let's embrace that technology and let's work together to evolve.
Sure. Thanks, Kevin. Thanks for giving those food for thoughts in terms of a buy or versus build. Appreciate it. Thank you for joining us at Apidays Dubai and Middle East. Thank you.
Thank you very much for the invite. Bye for now.
Yeah. Bye. This brings to an end the second segment of ours in this stage. We'll take a 14 minutes break. We'll join back at 3 p.m. Dubai time in this stage for Embedded and Open, the Future of Finance. We have one panel discussion and 2 individual sessions lined up for you in this track. Thank you.